Hey there, I'm Spencer Ford, a certified financial planner professional and CEO of Conservative Financial Solutions. We created the Money Minute to help give you insights on how you can better your financial life in 5 minutes or less. Because oftentimes, a better financial life means a better, freer, happier life overall. And that is what we want for you and your family. So let's get into it. We're talking about behavioral finance again today, the study of why investors behave the way they do. In this series, we identify some logical fallacies that tend to plague investors, so hopefully you can avoid them and speed up your path to living a better, freer, and happier life. Today, we're going to be talking about a big one, and that is recency bias. Recency bias is when the memory of a recent event leads investors to believe that event is far more likely to occur again. A great example of this happened in the Great Recession of 2008, the financial crisis. This crisis led many investors to exit the stock market with the expectation that economic hardships would continue for years to come. Going through the financial crisis convinced many investors that the event would likely reoccur. And fortunately, it didn't pan out that way. From 2009 to 2017, the S&P 500 posted 9 consecutive years of positive returns for a cumulative return of 127%, more than enough to make up for any losses that happened during the financial crisis. Investors are dealing with some recency bias coming off of 2022, a year in which the S&P 500 was down over 18%. There's no guarantee that the market is going to go up, but what we've seen throughout history is that if you give it enough time, life-changing returns can be had. So don't let recency bias distract you from staying the course towards your long-term goals. And your goals in the market should be long-term because that's how the game is won. Thank you for listening to this episode of the Money Minute. If you enjoyed it, please subscribe to be notified when more podcasts are released.
Securities offered only by duly registered individuals through Madison Avenue Securities, LLC, MAS, member FINRA, SIPC. Investment advisory products and services made available through AE Wealth Management, LLC, AEWM, a registered investment advisor. MAS and Conservative Financial Solutions are not affiliated companies. Insurance products are offered through the insurance business Conservative Financial Solutions. AEWM does not offer insurance products. The insurance products offered by Conservative Financial Solutions are not subject to investment advisory requirements. Investing involves risk, including the potential loss of principal. Any references to protection, safety, time, income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Conservative Financial Solutions is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Conservative Financial Solutions.